Welcome to the Rick Helps Real Estate Show, the traveling road show edition, where we try to make sense of this crazy Arizona market. And I give up. That's it. Thanks for watching. Man, it's hard to follow right now. It's not really hard to follow. It's just not. I'm going to show you some numbers. That's why I call it this standoff, sellers versus buyers. It's getting kind of weird out there. And it's not just Arizona. It's everywhere where things are just bleh. California's a little bit different. They're trending down in some areas and coming up in other areas. And little tourist note here: I'm up in Washington State, and there's a really popular tourist spot here called Hurricane Ridge, and it's you drive up the mountains right behind the town here, and it kind of looks like the Swiss Alps, and it's a very popular tourist destination for people to come up to tour the Olympic National Park. Well, about a month and a half ago, that sucker burnt down. They were doing a $10 million renovation up there, and something caught on fire, and the whole thing went kablooey. So they're not even letting you go up there now because there's no bathrooms. So now the tourists are flocking to other parts of the Olympic Peninsula, and it's getting very crowded. And so my brother and his wife went to go out to a place called Miramar Falls, which is by Lake Crescent. He said they couldn't even find a place to park. And I said, maybe that's because they can't go to Hurricane Ridge. He goes, yeah, exactly. Good morning, Jackie. Welcome. So that's what's going on in my neck of the woods. Now, trying to look at trends in real estate and then trying to figure out what's happening. You've heard me say many times that not even the big guys get it right. Zillow, Redfin, CoreLogic, Realtor.com, they always put out their annual estimates. Well, how good are real estate agents? There's a magazine called Phoenix Agent magazine, and they did a survey of real estate agents earlier in the year, and they're saying, well, what do we think is going to happen? Well, 48% said home prices will fall. 31% said home prices will stay flat. 21% said home prices will rise. Now, remember, these are in the industry agents. How correct are we, right? What do you see happening this year with housing inventory? This beginning of the year, this is our outlook, right? I expect more housing will be available, 59%. How's that working out for us? I expect inventory will remain relatively the same in my market, 32%. Only 9% said they thought it would decrease. Now, you got to remember that these surveys were probably conducted in about January, when things were actually, inventory did increase. So I think people base their projections a lot on, well, what's happening today. You'll notice when interest rates go up, the choir starts singing that they're going to keep going up. They turn around, they go down a little bit, then everybody's like, oh, see, rates are going to go down. They're going to keep going down. So we ride the wave of the trend. And Jackie here said she was part of the 21% that home prices will rise. I remember that we were doing a show together, and Jackie had made the comment, I think prices are going to go up, and she got pummeled. People were like, you're nuts, you're crazy. And it was fun to look back on now, huh? What do you think will be the strongest motivating factor for your customers who want to buy or sell? And this one's confusing for me. You got rising interest rates is the green line, high prices, 25%. Being allowed to work from home is 10%. And then this is other. 53% said other. Well, other what? Evidently, there are comments like stable prices and interest rates in the 5 to 6% range, more available inventory, and slightly lower home prices. Not happening. Relocation in the valley for tech or healthcare jobs, and sellers need to move, buyers getting deals. So what is going on in our market? Let's take a peek here. And Stephanie here says, totally discouraged for the home I curate. I want to buy. They are selling out underneath while interest rates are increasing. Seller's market. It's just because there's not enough homes out there. But here's where we are with the sales price. So remember, that survey was probably taken right about here. And then whoop, up it goes. And here's the culprit. Now, we've been coming down on our inventory, and lately we're kind of starting to flatten out a little bit. Inventory's going up a little bit because sales are dipping, and they're dipping not much. Remember, we were rocking about, I want to say 3,000 homes going under contract a week. And now we're at 2,800. So you can see that we had the Memorial Day dip here. That red line is homes under contract. And we recovered, but not all the way from where we were. During this dip, this is when rates approach 7%. They're kind of hanging there. And now homes under contract are going down. Came up a little bit over the weekend, not much, maybe by about 100 homes. These are new listings that are coming on. They're starting to trend back down again. So we were getting to where the difference between the two of those was 76%. So in other words, new contracts versus new listings were 76% of new listings. When we got down in the 60s, then prices started to decrease. So I was watching this closely, waiting to see if that, and that's the gap. So you'll see the blue line grow, the red line go down, the gap between the two. That's why I track it down in the ticker below. See where it says there's a difference of 710 homes? Well, if that grows, that puts pricing pressure on. That means there's more available inventory to fewer buyers. That's how prices are adjusted. It's not, greedy sellers finally let go. It has nothing to do with that. It's more available inventory, fewer buyers. But if we end up with more inventory and the buyers follow along, then that gap will close yet again. And talking to one of our subscribers up here in the Seattle market, he said he notices the same thing. You get down 65%, prices start to subside a little bit, go down. Jackie's saying, Stephanie, I feel horrible for you. I wish there was a solution for you and many others. Breaks my heart as the favorite segment of the market. I enjoy working with first-time home buyers. So here, and she goes along to say, dang, Fed broke the market and they keep rates low too long. Good morning, YouTube. So look what's happening here with our inventory. Again, I'm showing that it's kind of flattening out. And we saw that a little bit in my new listings where they're coming down just a little bit. We were kind of doing a trend line here saying, well, maybe if we continue along this trend line, we'll be rocking down here at about, what is this number here? By July, maybe 7,600 listings. Looks like that's starting to subside. It's looking like there's a little bit of a flattening going on here. Now, this week's going to be kind of critical because we have the Fed is meeting again. The market's already calculating somewhere between a pause or a skip, that perhaps they won't raise rates this week. But the correlation between what the Fed does if they raise rates and the market's reaction with mortgage rates is about as clear as mud. So we never really know how that's going to shake out. And so then we got average list price. This one is interesting here too, as well, as it's kind of taking a little dippity do right there. See that? So the listings, because again, we were running about 95% of new listings going under contract. Now it's about 79%. Not a big change, but list pricings are starting to come down a little bit. I am going to watch this curiously and see what happens, but it's you can almost predict it. You can almost say, well, if new listings versus contract end up 65%, then this one's going to turn. Terry here says, and Terry, by the way, you asked me if I went to Aggies. That closed a couple decades ago. Terry used to live up in this neck of the woods. Zero down financing, 0 to get the loan, 8% to get out of the loan. Anyone see a problem? Yes. So we'll see what happens. Like I say, nobody's predicting it right yet. Listings under contract. This one I find a little bit interesting in that we had this huge dip for Memorial Day. And then since then, and I know this is kind of small. Let me get my handy dandy magnifying glass out of here. You can see that it started to come up a little bit. But as you can see by me tracking on the 7-day moving average, which tracks it on a daily basis, it's not sustainable. It's not happening. So sellers in a lot of the markets are not having a hard time selling their homes because there's just the demand is, I guess the best way to sort it out is say the demand is low, but it's serious. So in other words, the people that are looking to buy are wanting to buy. And so when they find something that they're looking for, they pounce on it. And so it's quite interesting. I'm talking while I'm pulling up another chart here. Some of the parts of town are doing quite well. For example, if we look at Chandler, which is leading the market in the CMI, Consumer Index here, you can see that their index is 294. Well, anything over 110 is considered a seller's market, and we're exceeding the 2022 levels when it comes to the CMI. Here's when rates first spiked up, and then inventory started increasing, and everybody ran for the hills. So are we going to head up back to 2021 levels with the CMI? Let's hope not. And I don't think so, because I think sales will follow any increase in inventory. Now, if I go down to, let's say, Buckeye here, where there's a lot of new construction, their CMI isn't as high. Now, I did a video on water last night, and yesterday morning, a little Q&A. You get a chance to watch that. I go into detail on what's really going on with the water situation here, where the governor supposedly has stopped all building. Spoiler alert, it's not true. So, take a look at that. She did add some restrictions, but not to the extent that people were saying so. And here we got Maricopa sitting down here at 108. All of those areas, and I'll show you Queen Creek here too, where the new construction is pretty heavy. They have the lowest CMI because new construction is the party that everybody's joining here. And Jackie says, an agent I am helping had a seller get two offers very similar to each other. The seller wouldn't budge and lost both. Was the were the offers at list price or were they lower? And so, this market is kind of strange. So I think that as we watch this week and see what's going on with interest rates, I mean, it's going to be more about what the Fed says at their meeting, I think, than their movement. If they pause or skip, then the market's going to go, okay, that's what we thought they were going to do. Maybe we can, maybe the bond market will go up and rates will come down a little bit. So let's see. We got a question here. Can you look at other places? For example, Michigan, we see 1 to 5.2% price gain start of the year, I think. I'd have to go to Realtor.com or Redfin to take a look at that, Bravo. I don't have access to that in the Crawford report. So I can't take a look there. Jackie's talking about the house. They were lower, but this particular home got listed in December, so it sat. The offers were reasonable. Now that's where sellers really need to pay attention to the market. In other words, if you're in a seller's market, let's say that they're in Chandler and you've got a CMI almost approaching 300, then and your home is in good shape, then perhaps you can sit on your hands a little bit and wait for the price to show up because of lack of inventory, but not if it's been on the market since December. So what do you got? You got December, January, February, March, April, May, June. Yeah, something needs to change here, your price. So if you got it, and what's happened is it's sitting there since December. Two buyers came in, and what did they say? Oh, well, it's been on the market since December. I'm not going to offer the list price. There's nobody is going to offer you a list price if it's been on the market that long. Now, if since December they've had a couple big price reductions, then yeah, that's a different story. But digging your heels in and waiting and letting days on market accumulate is the worst thing that can happen for you in real estate. And so that's where sellers really need to understand where the market is. But time is not on your side, whether you've looked at data or not. If your home's on the market and they call the agent and go, why is my home not selling? What do you think it is? It's price. Now, the price may be too high given the condition of the home. Maybe it's not set up very well. Maybe it's not staged very well, needs some work. Maybe there's other stuff going on in the neighborhood, but it's always price. If you don't think price affects the sale for your home, put a for sale sign out tomorrow, and for $10, I guarantee you're going to have a lot of looky-loos. Home isn't surprised. I jumped in to help agent try to get it sold. Both buyer offers almost exactly the same. comps to support the offers. Sellers out of touch. It's a probate sale. Need to sell. Now, probate sale, let me guess, there's more than one person making the decision, usually the kids. And the kids can't agree on price. They start looking at the proceeds that come out from the house. They're dividing it by 2 or 3. And there's always one in there that says, nope, I think I can get more. I've experienced that a lot of times. Like, you got one kid that's reasonable and go, yeah, we'll take, here Jackie says, yep, 3 sisters. Ding, ding, ding. Yeah, gosh, I've had that happen so many times. And you end up working with just one of them. When you're trying to negotiate, you're like, well, tell Sally that, if you divide it by 3, the difference in her proceeds are maybe only $5,000. And she was going to get $65,000. Now she's only going to get 60. So that's what happens when you have probate sales and estate sales, is that there's too many hands in the pot, and that gets ugly. It's just, and you'll have one that really knows a lot about real estate and the other one that they don't have a clue. And so the dynamics of dealing with more than one person it really drives a deal. In fact, I took a course to be certified as a senior specialist. That's one of the biggest driving things that they teach you is, look, when you're selling a house for a senior, or if somebody passes away and the kids get it, everything changes. And when you go in and you're selling a house for somebody that's like 80 years old, you can count on the kids swooping in and getting involved. And in one case, I had one, I was helping a gentleman from California buy a home in Santan. And right at the very last minute, a week and a half to go, the son out of Utah shoots me an email and says, I don't think my father should be paying for those closing costs. Let's negotiate to get that lowered. I'm like, you're a little late to the party. I mean, we negotiated quite well on this home. Everything's all set in stone. We're ready to go. And, we close next week. So who are you? But they do that. They start looking at the paperwork. Oh, Dad, you made a mistake here. Here's what I think you did wrong. And they come in right at the last minute. So good luck with that one. Move on, get another home. That's going to be kind of a tough one to try to get to move on. I think the Fed meeting is Wednesday. They usually start announcing what they've done about 11 o'clock our time. And in most cases, the market anticipates their move on Tuesday. So tomorrow is going to be a good day to watch the bond market if you're concentrating on rates at all. So we'll see what they do. Now, the Bank of Canada and the Bank of Australia, they skipped. They had a pause. Then they found that they had to jump back in and raise them again. So everybody in the markets are going, that's a little interesting. Is CPI tomorrow? I think it is. That's the interesting one. Now, they don't concentrate on the CPI so much as they do the, what do they call the consumer, the one that takes out food and energy. But I don't see a huge improvement in CPI, but I don't think we need a huge improvement. I think we're probably going to tick down just a little bit. But in this market right now, 0.1% throws everybody into a tizzy. So we'll see what happens. PPI, that's right. Thank you, Stephanie. I've got such a smart group on here. So we're going to watch that. I won't be live on Tuesday morning. I'll probably have something come out on Wednesday evening. And then a reminder that we have our show that comes out every Thursday night with the dynamic duo and Pat, What's My Rate McMasters. And then we follow it up with a live Q&A with Pat on Friday. So that's kind of my regular schedule. I'm going to put together some other things while I'm up here, just to kind of keep you in step with what's going on in the Arizona market. So I hope this is helping. Do me a favor, smash the like button and share this if you can. Let people know what's going on in the Arizona real estate market so that they're not guessing. And see if you can send it to one of those sisters, Jackie. No, don't do that. They're complaining about me on YouTube. So everybody have an absolutely fabulous start of the week. Take care.